how on earth am I ever going to get from this broker seat to actually owning anything?
Don't ever invest with someone who's never done a deal. If that was true, then no one ever would have done a deal.
That's like one of the biggest questions.
You absolutely have to get the first deal done.
How do you do it?
It was like a light bulb went off. And I was like, oh, this is exactly how you do it.
Half of our business is first-time syndicators.
He's the guy who teaches people how to do this stuff.
Oh, my goodness. And we're talking to him right now?
We've got him. Well,
Yeah. So it seems like that podcast is really driven by from the heart.
Yeah.
All right. Yeah. Of course.
Well, let's go with this one because this one is driven by Bo.
Yeah. This one's driven by Bo. Yeah. Interrupted by me. Derailed by me. I'd say.
that's probably true.
Driven by Bo, derailed by me. But yeah, Bo, what are you teaching me today?
Well, we have a special guest today.
Oh, yeah?
A gentleman by the name of Gene Trowbridge.
Uh-huh.
And I got to tell you, like, he got interviewed by Rod Santomassimo years and years and years ago. I was trying to figure out how many years ago. It was probably maybe 10, 12 years ago. It was before podcasting was a thing. And Rod, in one of his newsletters, just sent it out like a link to the recording of this interview. And on that interview, Gene explained what syndications were. And I had no clue.
Oh.
Zero. I had no idea. And I was in my early 30s. I'd been working with Dad for 4 or 5 years. And I was trying to figure out, like, how on earth am I ever going to get from this broker seat to actually owning anything? Like, how many deals do I actually have to do in this little town we live in?
Right.
To save up the money to be able to, even have a down payment on any significant size deal.
That's right.
And when
Yeah.
Gene and Rod had that conversation, it was like a light bulb went off. And I was like, oh, this is exactly how you do it.
Yeah. With the syndication, right?
Yeah.
How do people get in a position where they can invest? That's like one of the biggest questions. How do you do it?
And I literally, right before I sat down here, I was on a call with a buddy of mine who is now a commercial real estate broker. And he was asking me, hey, do I need to just stop doing this brokerage stuff and go start GPing my own deals?
Right.
And I'm like, can you underwrite a property? Do you understand how this works? Do you, like the whole idea of how I would transition from a broker to an owner and an investor started with Gene Trowbridge. And then I took one of his workshops and he actually taught me how to do it.
Wow.
And then I hired him because he's an attorney to actually do my stuff. So I think I'm on deal like 5 or 6.
Wow.
And he and his firm have done them all for me on the legal side.
And we're talking to him right now?
And he used to be a syndicator. He's the guy who teaches people how to do this stuff.
Oh, my goodness.
We've got him.
And you know how this all started with me and the Institute. It was in 1996. The annual event for the Institute was in Reston. And it happened to be the year that the site to do business was going to be introduced to the Institute. And Rosenberg, who was in charge of that event, came to me and says, you need to put on an educational event to tell people how to be a syndicator. Because I'd been talking to Rosenberg for a while. It's a friend of mine. And I said, I teach the courses, and the only way we teach a course is if one person buys a building.
Yeah.
I said, that's not how the commercial real estate industry goes. Just for your information, last year, the private placements were $2.7 trillion.
Oh.
I said, that's not, and it's, only a third of that's real estate, but that's not how people get money together to buy real estate. Just go out and buy a $10 million property on your own. You put $4 million down. All of our case studies are
Yeah.
So he said, well, why didn't you do that? I said, okay. But I said, no one's going to come. Oh, they'll come. And so I was right alongside of the room where the site to do business was going to start a half an hour after me. And my room got so full that they opened up the wall and they moved the site to do business into a different room. And I thought, at the time, I was the chairman of what was called the Advanced Professional Studies or something like that. And the purpose of that entity was that there was education after the 4 designated courses, which is now the Ward Center, right? And so I said, okay, so we need some education. I'll write a book. So I put together a 3-ring binder course on the Ultimate Group Sponsor Workshop, and took it out to the market, and damn, I sold quite a bit, but it was a with a 3-ring binder. So I finally found someone to help me that would put it in the first edition of the book. And now it's 4 editions.
It's a whole new business, right?
Yeah, it's a whole new business.
Yeah, I've got it.
And I swear to God, I told Rosenberg, no one's going to come. And the rest is history. So that was 1995, which was almost at the end of my own syndication business, because I was just about through with law school at that time, and I was going to become a lawyer doing this. So, but as a syndicator, I knew what to teach people.
So give Timmy, if you would, because he's about to ask you this anyway, but give Timmy a little bit of a feel for your background as a syndicator, because we understand that at about that time that you're talking about, you transitioned into becoming a syndication attorney. But
15 years. For 15 years, I syndicated primarily the new construction of self-storage facilities.
Oh.
I did 16 offerings, and in each offering, we built 2 self-storage facilities in Southern California, in the 3 counties in Southern California. And we would buy the dirt and then build the building, and at about 20% absorption, we would sell it. We never wanted to be long-term self-storage managers. I had started doing multifamily like everyone else, but I didn't like the management.
Yep.
Mm-hmm.
So I tell everyone I was looking for a type of real estate with 600 tenants and 1 toilet.
Yeah.
Yep. 1 hot water heater, and it's a small one up in the ceiling.
That's about it, And so I actually advertised in the Wall Street Journal for someone who had a construction background in self-storage. I find a guy out of Houston, and he knew how to pour concrete. Wow. And so we went on and we built self-storage facilities.
Wow. Well, I can tell right away we got a storyteller here. Like,
oh, yeah.
Makes me really excited.
Gene was also a CCIM instructor for a lot of years.
Oh,
won
wow.
a lot of awards.
40 years.
Yeah.
Like
40 years.
Whoa, we bagged a good one.
I'm just trying to be Gene when I grow up. I doubt I'll become an attorney, but
that's what I'm curious about. Before we get into the meat of everything, what sparked the interest in becoming an attorney?
Well, I had to get out of the syndication business, or I had to grow. I've always resisted growing too large. The last year that I kept track of it, I sent out 1,676 K-1s.
Wait, you're gonna have to explain to Timmy, who is an actor and a comedian. You have to explain
like a 1099,
what
like
a
a 1099. I had to stuff 1,676 envelopes with financial reports, tax returns, put a stamp on them. In those days, you had to do it all by yourself. And my company and I did that. And I said, the way the industry's going, I'm going to have to continue to grow. Another thing that happened is the broker-dealer community raised all their money for me, stockbrokers. Mm-hmm. And in the middle of the 90s, REITs came out. And REITs became a tough competition for me because they're publicly traded and liquid. And so an investor could buy a REIT share, and if they wanted to, in 6 months sell it, where I couldn't. Buy LLCs in those days, limited partnerships didn't have that liquidity. And the broker-dealer community was going to move away from doing my deals to go to REITs. So I just decided I had 4 or 5 years of steady income coming in from the projects. I thought I'd take that time to go to law school.
Yeah, why law school? Like I get your ambition to grow.
I wanted to stay in the same industry.
Yeah. Okay.
The same industry. I wanted to stay in the real estate industry, and I wanted to stay in the securities industry. And if I wasn't going to be a sponsor, what could I do? Well, go to law school. Kind of always wanted to go to law school, and this was the perfect time.
Well, let's get into some meat and potatoes.
Sure. Well, we have talked on the podcast, Gene. I've explained at a fairly high level to Timmy, what a syndication is. Essentially, you're putting a group of investors together. They buy shares in a company. The company then goes and buys a piece of property or builds a piece of property or whatever. And they
Simple as that.
How do you do this? Like that guy I was talking to earlier today who was wondering, like, should I stop being a broker and go start doing my own deals? Like the only way he would do that, be able to do that, is if he were to syndicate it. Like, what does that guy need to know?
Great question.
Well, the first thing he needs to know is he needs to have a database. In my days, it was a Rolodex. You used to have a Rolodex of investors, people you could call and say, hey, if I find an opportunity, do you want to hear about it?
Yep.
And so I think one of the things you have to have is probably some sort of a track record or history in the industry, and then people to call and a partner. I always, I'm going to ask you later in your talk if you have any advice for a rookie, and you're the 38th person I've interviewed like this, and every one of them, one way or another, have said, don't try to do this yourself.
Or alone, you mean?
The question is, Bo, if I give you my money and something happens to you, well, what happens to me?
Yeah.
So if you don't have a continuity plan, I'm not investing with you, period.
Sure.
And I won't do a deal. If you had come to me and said, I'm going to do this deal, and you didn't have Brad, I wouldn't have done it with you, because people get sued, they get divorced, they go bankrupt in COVID, they died. There's a CCIM who you probably don't know by the name of Dan Starkey. Dan is a guy about my age, and he and I did a deal together, and he was skiing in Park City and hit his head on a rock and spent a year in traction in Utah in a hospital. Came out a quadriplegic. Well, what if our 30 investors had only him to run things?
Interesting. If I remember correctly, you're not big on having a partner. Is that true? Or are we talking about something different?
What he's saying is, if I were to put this group of investors together and I'm the sole sponsor,
right,
and I get hit by a bus,
right,
what happens to the investors? Nobody's running the deal anymore.
Yeah.
All right. So in some of my deals, Dad is that continuity.
Okay.
And essentially, the investors would get an upgrade if I got hit by a bus. They'd get Dad instead of me.
The bank needs more than one person to be available to sign documents. So do vendors. So do leases. If you're the only person who can sign, and that's what the operating agreement says, and you're incapacitated for one reason or another, what happens? It's not fair to the investors. It's too much of a risk.
So what kind of partnership are you not big on?
A partnership to me is like a marriage.
Yeah.
So I'm going to enter one very, very slowly and carefully.
Yeah.
So I'm leery of those.
But in your LLCs that you put together for syndication, you have a couple people that are running it with you.
Yeah. If something happens to me, there's somebody to step in and continue to run the deal for the benefit of the investors and the vendors and the lender.
Let's move forward.
Okay.
Yeah, I think I got it. I understand. Yeah.
So what else does somebody need to know? Because before I took your workshop, I had no clue what we were talking about was actually a securities issue.
If you take money from other people and you tell them that they could project to have a profit, but you're going to make it happen. I guess the government a long time ago decided that there's some interest on the government's viewpoint to figure out who you are, what you're telling the people, and how is that thing going to work? So the two laws are the first, the Securities Law, that says you have to give the investors complete disclosure of everything, and that's in the documents we write. And then the other law is if you're going to sell a security of someone else, you're going to have a license. There's a for sale by owner exemption. It isn't called that. It's called the issuer exemption. But if you sell your own securities, you don't need a license. So there's two laws that were written in 33 and 34 that are still the laws today. And the whole key is if Bo is in charge of my money, we're going to regulate Bo.
And if you do this incorrectly, what would happen if a guy like me puts a deal together, goes on Google and finds a generic PPM or private placement memorandum and just sort of throw it together myself because I don't want to pay an attorney to do it? Mm-hmm. What could happen to a guy like me that just starts to cut corners?
They aren't really legal exemptions, but there's always this exemption. It's the good deal exemption. Mm-hmm. If everything goes right, no one's going to care. Or it's under the radar exemption. The deal's so small, even if it goes bad, no one's going to care. But other than those two, the most severe thing is you could go to jail. The least severe thing is the investors can get a rescission. And in a rescission, you have to give the investors all their money back, plus a stated interest rate, depending upon if it's a state rescission or federal rescission. And that's going to be kind of difficult because the money's in the real estate. If you just raise $3 million and now you have to give the investors back $3 million, but you own a self-storage facility with it, where are you going to get that money? And if you don't pay, you're in trouble. And you can go to jail. Generally, you're going to jail if it's fraud. You took some money and you didn't do with it what you told them you were going to do. But other than that, civil activity is always is always a financial responsibility and a financial burden. And your direct question was, what if I just did all the documents myself?
Right.
Well, you'd get crucified in court because the common practice is to use a securities attorney to draft the documents for the protection of the investors. And you chose not to do it. You chose not to do it because you didn't want to come up with the money today that you would be reimbursed for in 30 days once you started raising money from the investors. It's their document. They're going to pay for it. You're really not helping them at all. I've been expert witnesses in a few cases where it came down to the fact that this was a document that someone pulled out of their hat. And the best way you can always tell is in the first paragraph. I love it. It says, we're going to form an entity. We're going to sell shares. And I'm going to be the president. And we're going to call it a limited partnership. Well, there are no shares in a limited partnership. There's no president in a limited partnership, so we've got 3 or 4 words in the first paragraph that tell me you have no idea what you're doing.
For the record, just to be abundantly clear, I've done, I think, 5 or 6 deals like this.
Yeah.
And every single time, like Gene and his firm has done it for me. So, like, I asked the question for all the people out there that I've heard over the years who are thinking about doing this, and they literally think, well, I'll just bootstrap this thing.
Right.
Which, that kind of initiative, like good initiative, bad judgment kind of thing, do not cut corners on the legal side of this.
Right.
I carry E&O insurance in case there's something wrong with my documents. Now, if you're going to bootstrap it, not only did you bootstrap it, but I just bet you didn't buy E&O insurance.
Yeah.
To protect the investors. There are all sorts of crazy things. One of the problems in the securities law is there's no harm, no foul rule. And I'll tell you a great case that's out there where a guy raised $6 million and he was going to buy property A. That's what he told everyone. Well, he bought property B. Property B actually turned out pretty good. And he gave the people all their money back plus more profit than he had promised in property A. But someone got a burr on their butt and took him to the SEC, and the SEC sued him.
Oh.
And the SEC put him in jail for 7 years.
Oh.
The SEC gave him a financial fine of giving the people all their money back. His defense was no harm, no foul. I made them more money than I thought. And they said, yeah, but you lied to them all the way down the line.
What investor is reporting that? You know what I mean? Like, why would he? Why?
Well, there are a million reasons. Let's say this reason. Let's say you told everyone you were going to buy a apartment building, and you bought a strip center with a liquor store in it, and you're of the religion that doesn't go with liquor stores.
Sure.
I've had one client who's gone to jail, and he was going to do a blind pool, and he was supposed to buy a foreclosure. This is in the early 80s, foreclosure properties at the steps of the courthouse. And he took the money and he bought a bar, and in 6 months, totally turned the business of the bar around and sold it and made a profit. First of all, he wasn't supposed to buy a bar.
Sure.
And secondly, when he made the profit, he put the original money back in the investor's account and kept the profit.
Whoops.
So he went to jail.
Yeah, I get that. I can understand that. If we can we, I want to step back for just a second, because one of the first things that you said, Gene, was the first thing that you need to do if you want to put a syndication together is know who to call. So here's the picture. Here's the character. Okay. This person wants to move into syndications, but they've only been in brokerage for like 6 months. And before that has not been much into commercial real estate. They know you, right? So maybe that's one person they could call if they want to put a syndication together. But would it be a better idea in general to stay in the business as a broker to build up that Rolodex? Like, what is some of the best ways to have that database of people you can call?
I said a Rolodex is important, but in my list of 10 things, the number one thing is continuity. Find a partner to do it with. So to answer your question, if my Rolodex isn't very big, maybe Bo's is.
Gotcha.
And Bo and I will do a deal. Or maybe collectively, it's neither one of us is very big, but collectively it's just big enough. And your first deals are going to be done with friends and family.
Yeah, right.
I mean, you're not going to advertise on social media and expect people to send you $50,000 if you don't have some sort of a track record of investing in real estate.
Gotcha.
So
first deal, friends and family to start that track record.
It's going to be people who know you well enough, and it's going to be a small deal.
Yeah.
Okay. And you got to get that first deal done. As I say, the second question an investor is going to ask you after your continuity plan is, have you done this before?
Mm-hmm.
And you need to say, hell yes, once.
Yeah.
That breaks the ice. Now, I have been in the audience when panels of syndicators patting themselves on the back say, well, don't ever invest with someone who's never done a deal. Well, if that was true, then no one ever would have done a deal.
Right.
We've all had, someone said, have you done it before? We've all had to answer the question, no.
Including all those guys on the panel.
Yeah, and including all the guys on the panel. So that's just pompous. The most conservative investor would agree with that. Well, I'm only going to deal with someone who has a long track record. No, there's nothing wrong with that. But that's not how our business goes. I think half of our business is first-time syndicators.
Oh, wow.
Yeah, and we've done over 1,000 offerings. I'm sure 500 of them were the first time.
Wow.
Now, I've had syndicators. My most prolific guy has done 164 offerings with me.
Mm.
And then I've had syndicators who do one and say, I don't like that very much.
Sure.
I think I'll go back to being a broker.
Sure.
Yeah, number one is continuity. Find someone to do it with. There's always something that you can't do that someone else can do better. And so you need to team up with them and provide your investors the safety of two people. And the second thing is develop your database. But that's always an ongoing. You know, in The Wizard of Oz, the good witch came down in this bubble.
Mm-hmm.
Yeah.
Okay, that's what you're doing with your database. Whatever you're doing, you're always in the bubble building your database. No matter what you're doing, you're always building your database. It's
Sure.
an ongoing, everyday project.
Sure.
And it's just talking to everyone you can. I mean, there's some techniques, but you have to be a little careful about advertising. So anyhow, then the third thing I tell people to do is do a specific property. Don't try to raise money on a blind pool. You know, hey, if I find something, send me some money today, and if I find something, I'll buy it. That's not going to work. Your first deal, before you have a track record, you have to say, this is the building. Here's the picture. Here's what I know about it. And then the next thing, I think your first raise has to be $1 million or less. You absolutely have to get the first deal done. And you're going to have a limited number of people who will invest with you. So depending upon where you are in the country, $1 million can buy you a lot or not very much.
Sure. What's number 5?
Hire professional advisors. And the next one is to structure your deal so that you get paid as your investors get paid, not front-loading your benefits. As they make money, you make money. Gosh, right now I can't remember the rest of them. I think, I know the last two are don't count on anyone else to raise money for you in the first deal, and don't count on anyone else to do your investor communications for you. And then run your syndication as a business, because the whole key is you're investing someone else's money. Mm-hmm. Your responsibility is to treat their money better than you treat your own, and that's the premise of the securities law. Your fiduciary duty.
Have you heard the term fiduciary before?
No, that's a good word though.
It basically, next time I'm in an improv audience and somebody wants a word, fiduciary is going to be my word. Yeah. Fiduciary, basically, and Gene, correct me if I'm wrong, but it basically is just saying that you're treating someone else's interests higher and before your own.
Fiduciary. No, I'm just laughing at the word fiduciary. Just fiduciary.
If you don't do your fiduciary duty right, then in legal terms, you're facing the F word, fraud.
Fraud.
Capital F.
Like that's the scary, risky part of this to me, which is why you hire guys like Gene to make sure all the legal stuff's handled correctly. Sure. When Gene's talking about hire pros, like hire the professionals that are going to do this well. So if any of the investors ever call you out on how you've operated the deal, you can point to, look, I went and I put together the most experienced professional team I could for your benefit.
Fraud is an intentional crime. If you go through the elements of a fraud conviction. It's you intentionally told people something that wasn't true and expected them to act on it. And as a result, they were damaged. Or you intentionally didn't tell someone an important fact, knowing that if you did, they wouldn't invest with you. And so you didn't tell them, and they invested with you, and they were damaged. So, I mean, you can have misrepresentation. There are a number of things that in misrepresentation, it's not intentional. It's just like in real estate, you didn't act to the level that's expected in the industry, but you have to prove intent.
Right.
In 2018, I didn't tell anyone in my offering documents that a pandemic was going to come to the country and people who were buying apartment buildings weren't going to be able to inspect the units and tenants were not going to have to pay their rent because the government was, I didn't know any of that stuff. And in 2020, I didn't know that interest rates on bridge loans were going to go from 3 to 7% in 60 days. That's not fraud. What is material and what can you be expected to know that you need? Anything you can be expected to know, you need to disclose, but some things are just outside of the realm of knowledge. So.
Yeah. With the hire professionals, is there any more to the list besides, like, of course, get a lawyer, right?
Sure.
Specific lawyer, get a CPA. What else would be on that list?
Property managers. Most of the syndications are not done in your backyard. Take all my California clients. They're generally buying real estate somewhere else. Take all the people that have bought real estate in Texas. They're going to need someone on the ground, boots on the ground, to manage it. So professional management would be strong. I have a good friend who's an insurance adjuster. A lot of business in Texas and from hailstorms. So whatever it takes to run the asset, hire professionals.
So you might need a leasing agent, property managers. There could be. It really depends on, if you're doing self-storage, you're hiring employees.
Right.
If the facilities are big enough, you actually operate that more like an operating business versus property management. It just really depends on what the deal looks like.
Yeah,
If
gotcha.
you're doing senior housing in Southern California, it's a completely different scenario than if you're doing multifamily that's 30 minutes away from where your office is.
Right.
So it would really just depend.
And like for anybody that's listening right now that is just, their interest was piqued of like, how do you do this? How do you do this for the first time? Bo and I did an episode where he went through his pitch deck. He showed me everything that he had prepared to pitch to an investor. You can watch that right here just to get a more in-depth look at that stuff.
And just so I don't get in trouble with Gene, that was a closed, done deal.
You're educating. You'd have to make an argument that was a generic presentation, not with the idea of making an offer or a sale. You could conceivably, while you're doing that, be contemplating your next deal and having me working on the documents.
Right.
And then people who watch that, you would expect they might call you someday and say, hey, the next time you have a deal, call me. That could get you in trouble. It's easier to do generic work like that when you're not contemplating, we're not doing another deal. And my definition of contemplating is when you sign a fee agreement with the securities attorney, not the LOI, because you may not go through with the deal. You may keep it yourself. You may wholesale it. Not even the purchase and sale agreement. I don't know what you're going to do with that property.
Right.
But when you sign a fee agreement with a securities attorney, you're contemplating a deal. And at that point of time, you better stop advertising.
I'm seeing Gene's value more and more. Like all these things where it's like, you can get in trouble for doing that. Like, look, he knows what you can get in trouble for doing.
He mentioned Brad before. Brad and I, have... And we've talked to Gene a number of times. They're like, hey, can we do this? We want to do this. And he's like, no, can't do that.
He's the one that's telling you we can't
he's the one.
talk.
No.
We can't say that. Yeah.
Well, he keeps us out of driving into ditches.
For somebody with good character, right, to get in trouble in that way, it'd be like ignorance.
Timmy, even if it's ignorance, it could cost investors their money.
Yep.
So ignorance isn't intentional fraud.
Sure.
If you're selling houses, you're responsible to know certain things, but there's some other things you're not supposed to know. You're not supposed to be able to look under the foundation and see if the joists are rotted. That's not your responsibility. It might be okay for you to suggest to the buyer that they hire someone who knows about that to do it. Right. But just to say, well, this house is fine, that's probably a mistake.
Yeah. Gotcha.
So that's good. This is a good session, guys.
Good session.
Yeah. Well, look, Gene, what we do at the end of this is we give Timmy a pop quiz. He's an actor. He's a comedian. This is all new to him. So we give him a 5-question pop quiz at the end of these episodes. As our guest, you get to ask him the first question, and we'll see how he's been listening.
Okay.
All right, pop quiz.
Timmy, the first question is, what is the most important thing when you're thinking about is what I'm doing as security? What's the most important thing?
Continuity. Right? Continuity. Make sure you have somebody with you that can help you. And if something happens to you, there's somebody else that's able to run the deal for the investors.
That's a good answer. Bo and I could do a deal that we're 50-50 partners in, and we make all the decisions unanimously. Not a security. But the minute I give my money to Bo and say, you do it, now it's a security. Now, in order to do a security right, I think, Timmy, you gave a good answer, continuity.
All right.
Well, that one for one, we'll say.
So, question number 2.
Yes.
Gene, at the very beginning of our episode here, he threw out a number. The amount of placement, was it in 2023? The amount of placement, money placed in 2023.
Oh, yeah.
It was a rather large number. Do you remember what that number was?
$2.7 trillion.
Yes. That is a big number. Like
That is.
And in 2023, when interest rates are still, they're going up and everything about the industry is constricted a little bit, it's a little bit harder. There was still that much money placed into syndicated deals.
Right.
Like that's a
that's a lot of money.
But most syndicated deals aren't real estate. I just got through recording 8 little videos about success stories I can tell you about. And one was a client bought a 15% ownership with his group in a professional hockey team. One was a client who went in tenants in common with another operator, and they bought 2 olive groves in Northern California for the production of olive oil. Another one was fiber optics.
Yeah.
Okay.
A guy wanted to bring fiber optics from the cables that are in the ground already into his apartment buildings and provide everyone with Wi-Fi service that he could charge for.
Yeah.
And so they raised $3 million and bought 10% in a fiber optics company.
Good move. Fiber, that's that good.
So, there are all sorts of crazy things. I've got one company that I'm just working on the documents now, and they're basically into financing vehicles for retailers so that the retailers can borrow some money, but of every sale they take, part of that money gets paid back.
Nice.
Fractionalizing without really being a lender. That's kind of a complicated deal. A lot of things. The whole Jobs Act in 2012 was to promote capital raising to jumpstart our businesses.
Oh, yeah.
And so that's everything that's happened since 1981 in the securities industry as far as money raising has been to loosen it up so that people can raise money because of jobs.
Sure.
Small businesses, 500 employees or less, everyone counts on equity.
That makes sense why that number's so big.
Yeah.
Right, yeah, because it's all syndication investments.
Yep.
Yeah.
All right. Gene, question 3.
After continuity, what do you think the most important thing for a syndicator to do so they're ready to go out and raise money would be? Yeah,
it'd be something that is ongoing that you should do all the time, which is float down in a bubble like the witch in Wizard of Oz. And in that bubble, you are creating a database, Rolodex. Yep. I don't know where you'd buy a Rolodex anymore. Maybe they still got them at Staples. They do, actually. I saw.
Do they really?
Yeah, they do. Yeah, some people like that tangible.
Yeah.
Okay. I think that'll always exist.
No. I think that's
That
fine.
answer was correct.
Yeah.
Yeah.
Okay. Great. All right. Question number 4. The Securities Law, and there was a second law that I don't know that Gene actually named. But there's 2 laws that kind of govern how all this stuff
1933 and 1934.
works. Nicely. Okay. Yeah. What years were those laws? Okay.
Yeah.
Good. Pushing 4. You're 4 for 4.
That's
All
right.
Gene, last question. Give him a hard one.
The 33 Act was to regulate the disclosure that an investor receives before they invest so they can make an informed decision.
Gotcha.
The 34 Act was to provide licensing and regulations to people who are out there selling securities, and we don't need that. There's a rule that we have in real estate that says you don't need a license, and it's analogous to the rule in securities that you don't need a license when you sell your own stuff. And what would that common rule be called?
I wish I was listening to the question.
All right.
Will you ask me one more time? Just ask me that question one more time.
In real estate, you don't need a license
Right.
to sell your own real estate. Okay?
Okay.
And in securities, you don't need a license to sell your own securities. So what would you kind of call that if you just wanted to use plain English?
Fiduciary. Oh man, I don't.
If you were going to sell your own home, what would we call that?
On the market. Put it on the market. No.
For sale by owner.
For sale by owner. Is that what we're talking about?
Yeah,
That's the answer. Gotcha. For sale by owner.
If I sell your house, I need a license. If I sell your security, I need a license.
Yes.
But if I sell my own house,
Gotcha.
I don't need a license. And if I sell my own security, I don't need a license.
I see. Such a simple question that I
Probably poorly stated, but anyhow.
I knew exactly what you meant.
Yeah.
You know?
No, it wasn't your fault. It was me. It was me. All right. Well, 4 for 5.
Yeah. That was great. Well, Gene, if somebody wanted to reach out to you, where could they find you?
Well, let me give you my website.
All right.
Okay. And the website is TN for Trowbridge Nay, my law firm, TNLLP.com. And then my direct phone number is 949-855-8399. And our website has all sorts of information. Actually, if you go to my website, you can get a free PDF of my book.
Yes. Great.
And we've got a great YouTube channel which talks about all this stuff.
What's your YouTube channel? I can link it.
TNLLP.
Okay. Great. And that includes, because I know Bo's about to be on your podcast. What's the name of that podcast?
TNL Talks.
TNL Talks.
Trowbridge Nay Law Group Talks. And so we'll post his interview on our YouTube channel.
Great. And just for the listeners who might be interested in that, what's the main topic? It might be obvious, but what is it you all talk about?
Well, I'm going to ask Bo 3 questions. How did you get started? What do you think is going to happen in the next 3 years in the commercial real estate business? And what advice do you have for rookies?
Oh, awesome. Great.
Those are the 3 questions I've asked everyone.
Oh, awesome. That sounds awesome. Yeah.
Yeah.
Great. Cool. Well, all that's linked to the show notes. If you're watching on YouTube, hit subscribe, ding that little bell. Please leave us a review on iTunes. That helps us. It really helps this reach out further to the ears that really want it. And yeah, leave a comment if you want us to talk about something specific. Gene, thank you so much for being here.
Yeah, thanks for your time.
Thanks for your business, Bo.
Yeah, well, thanks for keeping me out of a ditch.
Yeah.
I appreciate it. All right.
Cool. Thanks, Gene.
Bye, Alice.
Bye, Alice. Bo.
Oh, yeah, we have our new newsletter.
A new free weekly newsletter.
Free weekly newsletter. It promotes the a recent episode and also provides great business-related content. 5 to 7 articles a week. And you can sign up for that newsletter at subscribe.wgbarron.com. Subscribe.wgbarron.com.
Of course, you can find all that information in the show notes or in below. Love you, brother.
Love you, man.